Okay, so we got the sign, ready to rumble. Let's start, let's begin. And I would like to welcome all of you guys to be here. We have some few participants in the room, not that much, but a warm welcome from our side. And we have panelists. We want to discuss decentralized finance versus centralized finance. Why is this important? For whom is this important? And I'm very glad to welcome my panelists. And I would like to start with Sarah. Sarah, she is located in Frankfurt. And Sarah, please be so kind, introduce yourself.
Hello. So first of all, thank you for the setup. And I'm very happy to be here, as it is quite last minute, actually, that I'm participating. I am working for the Frankfurt School Blockchain Center, which is a think tank and research institution of the Frankfurt School of Finance and Management. And we are looking into use cases for blockchain. So not only enterprise blockchain, but also use cases beyond that. And obviously, DeFi is one of the topics that we're dealing with, that we are doing research on, that we're supporting students on writing their thesis in that field, and also industry and Internet of Things. So Industry 4.0. And Internet of Things is another of our topics. Personally, I am also writing articles for CashOnLedger, who are also in the DeFi space. So I'm thinking we can speak about this certain use case, certainly assets as a service and pay per use, which is quite big in the space currently and growing. Other than this, I'm currently participating in the Distributed Ledger Technology Talent Program. That's also set up by the Frankfurt School Blockchain Center, which is a mentoring program for women, especially to drive diversity in the blockchain space. So that's what I'm currently doing. I'm going to be studying blockchain technology and digital assets in my master's program, and just finished my bachelor's, wrote my thesis in the field, and I'm very happy to be here, to gain the experience, to hear from other industry experts.
Sarah, thank you so much for the introduction. I would like to hand over. Phong, would you please be so kind?
Yes, thank you first for having me here. So I'm Phong, I'm like the CEO and co-founder of iVE.ONE. We developed digital asset infrastructure for banks, for asset managers, for investment companies, so that they can access to cryptocurrencies and digital securities. And of course, DeFi is one specific topic that we're looking into. Yeah, because as I already mentioned, it's one hot topic which just came up this year, but it already exists quite long. Yeah, I think the first time I heard about like DeFi was CryptoKitties in Hong Kong when I was there. It was 2017 or something like this. Yeah, so quite long. And now we're talking here in Germany about this topic here right now. So quite interesting to see.
Thank you so much. And now I would like to hand over to Martin.
Yeah, thanks for having me here. Yeah, my name is Martin Quensel. I'm the co-founder of Centrifuge. Centrifuge is a project which is also partially Berlin-based, and what we're doing is bridging the gaps between, I think, centralized finance and decentralized finance, and especially actually preparing the real world to use crypto decentralized finance. So really kind of how you can actually make rather unfungible assets, everyone knows, like a car loan, real estate loan, financing an invoice, et cetera, into something which is more fungible, more liquid, and can actually be also financed using DeFi as a new source of liquidity.
Thank you so much. So I think now we have a kind of an idea of what DeFi might be. Let's dive into and understand a little bit more what this is. And here I'd like to, firstly, even we do not have so many participants here in the room, but do you have any experience with decentralized finance? My participants? Can you raise the hand to say, yes, we have, or no, we haven't? No, I see you nodding, so obviously not just a little bit. And maybe we should start with a definition, which seems to be helpful to understand, and I can't see the streaming guys, and therefore probably it would be helpful if we start with a definition. Who dares to make a definition what DeFi is about?
I can try it. So yeah, I'm not sure if there's really an official definition. What I think what decentralized finance is a movement to create actually the financial system we know in a centralized world with all the tools we know in a centralized world, from holding, investing, lending, credit, structuring, derivatives, syndicates, etc., to have that all available on-chain. And on-chain means really it's not a single institution like a bank you go to and it's providing this as a financial product. You go actually on-chain and use a protocol, and the protocol is providing this as a product. So you use your wallet, replacing the bank account, and with the wallet you actually can use those financial instruments to lend, to get credit, to invest, to kind of even have those structurings like derivatives being built on top of those things, investment advisory protocols, et cetera, where you actually do not have an intermediary anymore, but decentralized infrastructure, which allows you actually to be empowered as a user and do those, use those instruments directly without intermediaries. That's, I think, the idea of decentralized finance. It's most likely better definitions, maybe looking around, but that is actually also what already has happened, I think, in the last maybe 2 years. The DeFi has built all these financial instruments, or almost all, for just the crypto world. If you look at crypto assets, Bitcoin, Ether, etc., whatever coins, these financial instruments, actually to invest in those, use them as a collateral, provide credit, etc., that's already out there. So that is kind of, this mission is accomplished.
Okay, thank you so much. But I would like to know, you said you put it on chain. And here once again, what does this mean? I put something on chain. You know, in the real world, I'm sometimes in, I go to my bank. I have my bank account. I know who is in charge. But now, Martin, you said, it's on-chain. Please be so kind and help me, support me. What does this mean?
So the idea of on-chain means the use of blockchain. Yeah, so in the background you have a smart, okay, now we're going to technologies again. Yeah, let's say like programmable code, yeah, that's usable, for example, to transfer tokens, assets, let's say like this, yeah, on the blockchain itself. It's called like this, to try to make as easy as possible for people to understand.
Okay. Sarah, would you like to add something? What does it mean on-chain? How can I get that point directed?
Well, for this, I would like to refer back to what Martin first said when he explained DeFi, because what he referred to is that DeFi wouldn't exist without the traditional financial infrastructure that we have, meaning we know the assets that we also put on chain. So, for example, that could be a house these days, real estate. We see it with art happening. We see this with rights. So anything we know from the real world really now moves on chain. And how does this happen? Is just we have a digital representation of the thing, of the object that might be abstract. So right is not really something that is tangible in any way. However, a house, for example, that one we can imagine more easily to be maybe put on chain because we can actually see it. What happens is the house is being broken down into tokens, as has been said before, and this token, or this one token, represents a fraction of the house that we see in real life, and then we can participate in buying or investing into the house or refinancing it. So all the things DeFi enables us to do, invest, borrow the money, like Martin said, we can do anything we can in DeFi that we can do in traditional finance and more, but with a digital representation of real life assets on the chain.
Okay,
so we take from real life onto the chain by having a collateral as well. So there's something behind that we have on chain. It's not just made up. There's an actual value standing behind what we put on chain.
Okay, I need to come back to that on chain. Probably, I'm not 100% clear with that. What again does this mean? Who is running that on chain? Who is taking care of? You know, once again, if I have something on my bank account, I can go to my bank and I can claim them for something. Hey, you have done something wrong. So now you said it's on-chain, and as we all know, blockchain, it's a peer-to-peer system. We would like to have all the copies on each node, whatever. But who is running that system? So let's say we have an event, something is going wrong, like we have seen tonight with Facebook, something is going wrong, and oh my goodness. So who then can jump in and fix it? Who would like to answer?
I can give it a try again. So, yeah, blockchain, first of all, I think is you mentioned already, a decentralized network of nodes holding a copy of the data, which is called the blockchain, and where the data itself is actually cryptographically ensuring that every of these copies can actually not be altered. And if then a new transaction is coming in, it needs, first of all, to be distributed to those nodes. And then actually all these different nodes in the blockchain somehow need to align if the transaction is correct or wrong, if it is fraud, or is it a correct transaction, create a consensus and add it to the blockchain. And that is most likely, what you refer to. And this infrastructure is really provided by an anonymous network of nodes where you do not know who is operating them. And actually to keep them aligned, you need an instrument. And that is called either mining or validation, just depending on how the blockchain is operating. Though Bitcoin or Ethereum in its current status is a good example for mining, where you actually need computer power to solve cryptographic puzzles, actually kind of, guess a hash value, and who is then the first one who had found the right next hash value. So in Bitcoin, starting with 4 zeros, if I'm not wrong, currently a hash value, then this node, this miner can actually propose a next block, and the others actually then have other blocks around actually need to consent, hey, actually it's a true block, and that's then how it's then distributed again and created, etc. And if someone is doing something wrong, they actually waste their computer power and the guessing of the next block and the investment actually into this computer power, where they get in return a Bitcoin or a fraction of a Bitcoin currently in return for getting this next block. That is actually what is protecting the network.
Okay.
So.
I see the idea, I got it. But I now would like to know, and sorry, probably I start with you first, how can we use this in business? So we are here right now, we have heard a lot about the technical background, and the interesting factor is how can we use this, that this is workable, that this is really a cool technology we can apply for so many things. No doubt, I'm with you, I'm completely with you. But I would like to see where is the added value we have to create? Because if we want to apply something in industry, we need to convince business maker that there must be a true value behind, an extra value, because of implementing all the things you've mentioned. This is not an easy thing, so you have to have experts with you. And here the question, and I would like to start with you. So you are in real estate. You do a lot of things in real estate you've mentioned. And can you give me an idea of, and also Sarah, you've mentioned that this is possible to have a fraction of a building and being a partly owner of a block or whatever, block in terms of a building block property. So how do you differ from the old-fashioned analog way of doing that investment?
Okay, first of all, if we talk about tokenization, it's mostly called tokenization of everything. Yeah, so the idea is not only real estate, it could be everything. It could be like a piece of art, it could be an old timer, whatever, it doesn't matter. And the whole idea of this is, for example, normally, when do you have the chance normally to invest into real estate? First of all, either you're wealthy, you have a lot of money. Yeah, so it means you can easily be a professional investor, can invest into high value real estate. And the whole idea, for example, of tokenization is to split it into really small pieces, for example, where you as normal investors, normal person, has the possibility, for example, to invest into a building, which is normally, for example, 1 million. Yeah, you split it in 1 million tokens via €1, for example, and you can have really people coming in, normal people coming in, investing, for example, €50, where you then have, as Sarah mentioned, the rights, for example, to participate on an interest rate or something like this. Yeah, and that's the background idea of tokenization itself. Yeah.
But this idea is in the analog world existing. So we have these kind of investment opportunities also for little or small investors. So for little money, I can go and I can buy myself a fraction, a brick of the Brandenburger Tor, for instance. It's not possible, but let's say so, yeah? So I can do this because we, especially here in Germany, we have special funds, closed-end funds or open-end funds, or we have the so-called right real estate investment trusts. So I have the opportunity already there. So why? Why should I go into the digital world, and what creates that added value you've talked about?
If you talk about funds, for example, yes, you can, but the fund world is completely currently out of blockchain. Yeah, so that's like a given, because I think there are other challenges, especially from the regulatory perspective in regards to funds. Yeah, and the idea, for example, of tokenization, that's like just probably like the first step. But if we think about, so what I heard, because I'm really talking to a couple of, a lot of clients, here is what they're interested in is first of all like to issue it by themselves, where because normally if you, okay, that's now the word with issuing. Yeah, so it means like I give out, for example, a token to look for funding. Yeah, so in easy words. Yeah, and normally the case is, for example, you invest, and what do you do then with the investment? The idea, for example, of tokenization is to think about also higher liquidity in the secondary market. Yeah, of course, like it's currently not there, like the whole liquidity, because the exchanges they are not that far. But the future idea, let's say like this, yeah, could be that you're more transparent in the secondary market for also like the whole liquidity itself.
So we are still in the toddler phase.
Yes, we are at the beginning for sure, yeah, but the whole topic with DeFi will definitely come, that's for sure.
Okay. Sarah, what is your opinion on why do we need decentralized money? What do you think?
Well, the question I think has to be answered twofold, because on one we have the consumers, the private ones that we are at the end of the day, and then there's also the industry, which I said earlier that I'm working for CashOnLedger, and they're actually looking more into the industry side of things. So how can decentralized finance help processes become more efficient and overall change the model of businesses to begin with? So, for example, restructure the way that assets are financed. So what that means is, let's take the example of a tractor that somebody doesn't have to buy. So a farmer, let's say, he needs a certain type of tractor maybe 3 times a year. However, it does have a very high value in terms of how much money he would have to pay for it. So what he does instead now is he goes on and borrows this good. Now you might ask, okay, where's this at all revolutionary? Because assets as a service, so we see these all around. I think certainly in Berlin you have these types of services these days where you can just borrow a car and you pay for the use. So that's not new. But what would happen with, for example, a digital euro, which also takes place in the DeFi world, let's say, in terms of, well, where it was initially born. Now you can say, okay, if the ECB is going to come up with their own digital euro, which is likely going to be the case, so that means it would not be decentralized. How could the tractor example profit from this? And what would happen is, all of a sudden, we have, first of all, we have a digital euro. That would mean that transactions would take place much quicker than they already are, so for the tractor. But what that also means is that if this is then moved onto a distributed ledger system, so this entire who owns whom money and what way are the money streams flowing, is the insurance also involved here? So you are not only borrowing the tractor, you're also paying for the insurance that's behind it. You're paying for the intensity of use that work with sensors on the tractor. And this is all just possible on a distributed ledger system. So in that case, the digital euro can really enhance what we can already offer today. And so decentralized finance can bring even more forward what exactly it is that assets as a service and pay-per-use have to offer.
Thank you, Sarah. So I would like to come back to you, Martin. And we heard about efficiency, processes going to get leaner, smarter, and whatever. So you would say we start in business world, we will find the good opportunities to implement blockchain and decentralized finance. Can you give us a bit more details how this could look like? How IoT, for instance, Sarah mentioned IoT. What does this really mean? How can we understand that machines, they're talking with each other. Please, give us an overview. Be so kind.
Honestly, I'm not an expert on IoT, so I think IoT, Internet of Things, has basically nothing to do with blockchain. That is a machine which is connected to the internet, and a machine which is actually then able to share data, status, and basically also can be controlled through the internet. So, and what we, for example, using IoT for is if someone is shipping a container from China to Europe, they typically put whatever it is, air conditions, for example, into the container. Then customs is actually checking the container, is sealing the container, and then you may put a sensor on the door of the container, actually controlling that the container is dry, that the container is actually still closed, and may even the sensor is kind of from time to time just transmitting using GPS the location of the container, and then actually the one who would like to ship it always knows, hey, the container is on this ocean carrier, and the ocean carrier is on that part of the Pacific or the Atlantic Ocean, and the container is still closed. And then actually they can also forecast basically, hey, good condition, when the ship is arriving, when it's in the port of destination, can be uploaded through so customs again, etc., and so on. And that is, I think, nice for logistics, but it's also nice for financing what's in the container and the delivery of the container, because you can actually then, if this IoT device is connected to a protocol on the blockchain, and where on the blockchain itself you have trigger events where you say, hey, financing is starting, a repayment event is reached, etc., can actually follow the logistic process, and the IoT device is helping you through that. You do not need a human being anymore. So you can actually say, hey, I have a smart contract on the blockchain, and if the container is closed and sealed, the IoT device is actually starting to transmit data. You can actually say, hey, I start to finance what's in the container, pay out the money. Then the ship is carrying on, and you actually know, hey, all in good condition, all good, no delay here. Ship is actually reaching the port of destination. Customs is actually open the container. You can most likely, if you have also the bill of lading, which is the document for the entire process, check again, hey, that is and the expected opening of the container, the stuff is delivered, and it may expect the first repayment. Mm-hmm. And then you can actually trigger, hey, it's unloaded on a truck. The truck is going to a third-party custody warehouse, et cetera, and you can actually follow up the process and kind of do those triggers automatically with financing it. And that is, for example, also what we are doing on our platform. You actually say, hey, that is also perfectly explaining why blockchain, So you have a technology build where the technology itself and how it is actually working, that you do not need a third party to trust anymore, because the blockchain itself is an environment where you say, hey, I trust the protocol, that it is working, and that it not yet can be, third party cannot kind of alter the data, it cannot be censored. And with this given, that this is actually doing the job in the past a bank did, or someone financing it, checking the container, etc. That's now really a combination of those IoT devices plus blockchain and fully automated, and no human can actually interfere anymore.
I would just have an interesting question, probably like forward-looking. Yeah, but if you talk about like the whole IoT programmable money, let's say like this, and you can trigger like automated processes, would it really make sense, as Sarah said before, like this digital euro? Mm-hmm. Yeah, because I think this digital euro is one thing that a lot of people are looking into, and could really trigger like the whole movement further, but you say like, okay, it's blockchain, the other thing is digital euro would probably be like centralized, let's say it like this, maybe, and the whole idea would be now, okay, would it be much easier if we have this digital euro in relationship to this whole supply chain IoT stuff?
I would not say it's much easier. I think that it's a prerequisite. Only if you have that, the entire thing makes really sense, because if you actually only use a blockchain as an accounting system and then do all the financing stuff in real euros, fiat currency through the traditional banking system, you actually break it, because then you're still kind of combining an intermediary-free transaction layer with something where you need to rely and need to connect it to the real world in the traditional banking system. That's why we're using in those cases a stable coin, and digital euro is a stable coin. Unfortunately, there is nothing like this yet in Europe, so all the stable coins working out there are US dollar denominated in one way or the other.
So what you've seen that we are now somehow deep in the discussion. And before we move on, I would like to involve the audience. Are there any questions you would like to ask our panelists? Because we can dive deeper and deeper and deeper also into technical details and start a bit debate about which kind of protocol you are going to use and why you're going to use that. But I think this is not or useful for you guys right now. I would like to involve you. Are there any questions you always wanted to ask and you always wanted to know? So here are our experts.
Yes, I have a very general question. Financial industry is facing ever-increasing trend of regulation, over-regulation in the wake of limit. Now, even when I say regulation, it's more complex than that. You have national regulation between countries, central banks, monetary policy, but also on a very specific business angle. You have a lot of regulation concerning placement of investments and so forth and so forth. Further to that, you have the legal issues. You need legal certainty, you need title, as you rightly said, you have already a lot of crowd financing instruments and so forth. What I'm just wondering, and that's my very general question, do you ever take all this into account, or you simply perfectionize your technical models and solutions, but in a very, not to say cynical way, I say, if you have them as a standalone model, not related to the legal and political background situation, it's not really convincing for potential investors. I'm a business agent, I'm based in Zurich and Berlin, so I see a lot of exciting technologies, a lot of opportunities, but in reality, you can't really assess the validity of the model. And if you think about asset management, all this robo-advice and so forth, all this is nice and well, but if you're caught by the BaFin, for example, then it's game over.
Okay, so I'm not sure whether the audience, the streaming audience, could hear. They could not hear. I get the sign. So just let me wrap it up in terms of the question is about how can that kind of solution we see offered here by our panelists for the market, how can this be adopted by the market, embraced by the market, without taking any regulation issues into consideration? Somehow like this? Okay, and with this, I would like to hand it over. Firstly, Martin, I start with you, and then...
Yeah, I think that is maybe, if you look at what DeFi can do for the real world, maybe the most important question, you know, how it actually can be plugged into the existing system, follow the local regulations and laws, and that would start with workarounds, you know, so that you most likely look at jurisdiction first, where it works, and where you can create I think, a legal framework where the existing regulation is just supporting what you would like to do on chain. And I think Europe is moving, but still, even if everyone is complaining about the US is just from its traditional security law offering more freedom how to actually issue securities, how to manage them. You know, there are the so-called exempts from the security law, the 33, the 40 Act, etc. So that's why, for example, we started in US all these issuances structured using our platform, following actually US regulations with SPVs located in US, etc. But also we do the first steps into Europe. Germany, for example, is just moving with the Elektronische Wertpapiergesetz, you know, the EWPG, which was actually kind of, you know, fully put in place, I think, in June this year, where you can actually use a blockchain actually already to register securities and be a blockchain kind of, you know, decentralized security register operator and things like this, you know, and these are the first steps where you can see that actually also regulators like the BaFin adopting the new technology and go in the right direction, also actually kind of, you know, opening it up for the traditional banks to move into it, I guess, but also for blockchain fintechs like us to move into that space, you know, and it needs to be regulated, of course. You know, you need to protect investors, and DeFi currently, it's just, you know, providing financial instruments to invest in crypto is, of course, a complete, you know, from the BaFin, etc., regulator perspective, a complete Wild West. I'm not saying it's bad. I'm just saying it's unregulated, you know.
So are we in front of a new scam, scandal like what we've seen in 2017?
Probably, yeah, because as everyone know, I think like in 2017, this was the whole ICO world.
Yeah.
Yeah, where everything was really unregulated and not even Wild West, but I think like Wild West. Yeah, where a lot of people lost a lot of money. Yeah, and the DeFi world is currently unregulated, as you mentioned. But the idea behind the DeFi world is quite interesting. So from the idea like what you can do with the whole lending, stake, whatever, yeah, the whole idea is quite good. But I think to really have the mass market in this whole DeFi world, yeah, I think regulation is really important. I'm currently talking to banks. We started here in Germany, in Europe, and it took really a long time until like this regulatory landscape was built and developed so that we can now move forward. And from my perspective, why is the BaFin so strong for regulation? Yeah, because the idea of BaFin, or why the BaFin is there, is to protect like the small investors. Yeah, they don't care about protecting like the wealthy people or something. Like they do it just for fun, like the investments. Yeah, but really like the small ones, yeah, they need to be protected, and that's like the whole idea of regulation. If we talk about asset management, banks, and so on, they are already in the regulated world. You cannot say now, hey. Bank, please go now DeFi.
So here we have the point. The banks are regulated. They know how to play the game. And you are the new, young, wild ones. You come along and say, come on, we can do it better. So why do you think you can offer better services? What makes you better than what the existing economy already offers?
So I'm currently talking to a bank, yeah, and I know exactly what pain points they have. First of all, one of the pain points, for example, is they built like their legacy, their technology for over years. Yeah, and if you say like, hey, we want to scale, you need to order like a hardware from IBM, which took like 6 months. Yeah, it doesn't really make sense, to be honest. Yeah, and what as a fintech we can do is like we can really move forward. Yeah, like we're really innovative, we're fast. Yeah, and we can think of like new use cases. Whereas like in a bank, you need to talk with them like for 6 months, yeah, to probably create something new. And I think the biggest difference is like really banks are regulated. They know like the regulatory game. Yeah, what we as a fintechs, yeah, probably don't really know. But the difference is like we're really fast. Yeah, we can think of like new DeFi, for example. Yeah, we can think of new use cases. And the match has to be that we need to probably at the end need to figure a way like to work together. Yeah, to really reach the mass market. But regulation is a really important point.
That was the question. Sorry, I have to translate this towards the guys who are streaming us here. The question is, what kind of product is developed? Is this a product? Is this a service? Is this, what was your... the methodology. Yeah, platform is also a very nice term. I like it a lot because a lot of people are talking about, we make a platform, but what the hell is a platform about? So that's the next question. But first of all, what is this? What are you doing?
Yeah. So overall, we ourselves develop like a digital asset infrastructure, because I think if you just go to a bank and says like, hey, we have a methodology, here's like a new protocol for you, they don't even know what to do with that, right? So the idea from us as fintechs is like to really support them with an infrastructure, with a platform, for example, so that they can easily, for example, integrate it into their technology. Uh-huh. Yeah, that's like, and that's like where I see the biggest strength from us, yeah, as fintech, like to really build this new ecosystem, yeah, so that banks can probably integrate it.
But
yeah.
Now let me challenge you. That is necessary. I have to ask. You said you are going to offer an infrastructure service, so you are the man in the middle.
Partly yes. Yeah.
We're talking about blockchain, we're talking about decentralization. So, and if we do so, I would like to have a solution which is decentralized and not where I have a new man in the middle, which is using the fig leaf, I am the fintech and...
No, that's totally true. Yeah, but the whole infrastructure is at the end built on blockchain technology. Yeah, so
but who runs that? And that's, brings me back to the question at the beginning. Who is running the blockchain? Who is doing something on-chain? Who is bringing the infrastructure in? Who is, offering all these things?
if I would be now the super crypto enthusiast, I would always have the term bringing back the power to the community. Yeah, that's like, if you really talk with them, it's like blockchain. Yeah, so that the community has the power to handle all the mechanism behind it. Yeah.
So you probably think you are more offering like a private blockchain solution instead of a public blockchain solution?
Both, to be honest.
Okay.
Yeah.
Explain it.
I think the master roadmap would be public. Yeah.
Thank you. Thank you.
Yeah,
Okay.
but of course, like there's always different kind of things. For example, does it have to be like a private blockchain? For example, if you work like in between banks, yeah, because of data, for example. Mm-hmm. Yeah, these are specific kind of use cases here that you always need to look into, and then probably identify, okay, what's the use case, and then use the underlying technology, which would be like probably private or public.
Thank you so much. I wanted to ask, and I have to take into consideration, yeah, we have a few minutes left. What kind of social impact are you expecting? And here I probably would like to ask first Sarah. Sarah, when it comes to digital currency, like issued by the central bank, what kind of social impact are you expecting? Can you give us an idea?
I like that we're asking this question in a German context, especially because I'm not sure if this is just my experience, but for example, speaking to the older generation, what we see is a lot of skepticism and mistrust in anything that has to do with moving online. So if that is a currency, especially, we hear a lot of voices that say, I want my money to be private. And I think it is hard to answer this question at this point where we do not know what the design of the digital euro is going to look like, because it might well be that it has a very high level of anonymity that comes with it. It might be unlikely, however, it would actually be desirable for privacy reasons and for the reason of acceptance then, in the German population at least, that is. What we see, maybe we can take a look at those countries that have already adapted a CBDC. So that would, for example, be China, where the CBDC was more forced onto the population. And there we see that the acceptance is actually very low. They have to give incentives, give them extra central bank digital issued currency for them to use for a certain thing, a little bit like a voucher actually, for them to actually use it. So we see no acceptance at all. I think if we do happen to get a digital euro, people are going to come around at a certain point, especially with the younger generation then getting more used to it and this becoming second nature to them. But I do think we're still gonna have to trust the ECB, for example, in that case, because they're the ones issuing it, and they are not going to give up their monetary monopoly for that matter. So the decentralization aspect, I do not think is going to make that big of a difference in cultural terms in the population, especially because the private consumer sees a very different version of that CBDC than retail versus the wholesale CBDC are two different things, and we're not going to touch on all of them, or not the entire population is going to do that.
Thank you. So we have to trust, again, the ECB. Why not trusting the ECB? So you would like to get rid of the last lender of resort, as the ECB also is mentioned, like you want to get rid of the ECB and say private companies can do much better? I'm a bit provocative that I have to do. So, Martin.
Difficult, almost philosophical question. But if you look at our monetary system, hey, central banks are not there since ever. So, hey, they've been created by, I think, national states for a specific reason. And there was also something before. So money as it is much older than central banks. And I think, personal opinion, there will be a time where you do not need a central bank anymore, and where central bank issued money, even in its digital kind, is replaced by something else.
Okay, thank you for that. What is your idea about that?
Yeah, so overall, I think from my perspective, the ECB will not be gone, to be honest. Yeah, because as I already mentioned, yeah, they have like a specific kind of position, yeah, and they probably should be there in the future to really control it a little bit, let's say, yeah, because the question is like, would it be really adaptable in the mass market if we would always run like with the Wild Wild West? Yeah, that would be like the biggest question. And who's the party you trust? Of course, like, probably I can trust you. Yeah.
You should trust the blockchain and not him.
Yeah, but overall, there are millions of other people, yeah, who doesn't really have the relationship to technology right now. Yeah, and that's why you need to have some unit there that you can say like, okay, I trust them.
Thank you so much. And with this, I would like to come to an end. I would like to wrap it up what we've heard so far. I think it's a kind of an hen and egg problem, what we see right now in the market. On the one side, there are new technologies, they are in use, there are new business models, new business ideas. But on the other side, how is this going to be adapted? And a lot of people, and especially here in Europe and in Germany, we are an old country. Honestly, we are. The baby boomer generation is now moving into retirement, and so many new ones are not there. Probably this is a chance, but it's also a challenge, so we have to understand. Do we get the digitalization here in Germany really fulfilled? Yes, no? And that brings us, what kind of business ideas, what kind of new business models can we implement in our society? Is the society willing to accept this? And when it comes to a currency, I still believe that, and here, Phong, I do agree with you, that we will, that we are very fond of having the ECB because we know them, we trust them, and even sometimes we are a bit like, oh, why is the ECB behaving in this and in that way? But we are very happy to have them because they guided us a long time through all our issues we've seen in the financial market. So like this, I think to crack the ECB, it's a long, long way to go. Probably not necessary. What we also learned, I guess, today is that there is new potential using the technology, especially the blockchain technology, and there are many new opportunities which can be designed quicker, faster by fintechs, because they are like the small speedboats, quicker, faster, and an existing company is more like the tanker who is not so quick and fast in changing any direction or removing existing IT equipment and implementing something new. So therefore, we have to learn, we have to be aware of new things are there, we have to understand them, how they can help us in running the business. And for this, I would like to say thank you so much for participating. I hope you've learned a little bit about how it can be used, what is possible while talking about decentralized financial tools in terms of contracts or currency or I think we can talk hours and hours on that because we just scratched on the surface so far. If you would like to get a deeper insight, you can contact all of us because we are in this space, and I guess we have enough time while having a little mineral water outside talking about this topic a bit deeper. So with this, thank you so much for being here, and I wish you a wonderful day ahead. Bye, Sarah. Thank you for being with us.
Bye. Thank you.